it's really now, or it's
Hmm.
never going to be easier. It's never going
Yeah,
to be like a better time later on.
right.
So sometimes you just have to see the opportunities and, step out on faith and try it.
Hello, and welcome to Mornings with Joel, commercial real estate podcast, where we focus on rising stars and established players in commercial real estate and talk to them about how they are building legacies in today's marketplace. Hello, we'd like to welcome everyone to this edition of Mornings with Joel, our CRE podcast. And it's a very exciting Monday morning. It's a beautiful day here in Atlanta, and we're happy to have you with us. A very special guest we have today, Sonya, like Sonya Rocvil, is with us today. We're very excited to have her. Me and Sonya, we go back a few years and was instrumental in working with her on one of her early transactions. And, she's continued to be a rock star in the industry. So we're happy to have her with us. Sonya, how you doing today? Joining us from Brooklyn.
I'm doing great. Thank you. Yeah, I'm in New York. We're in Brooklyn. It's not as sunny out here today, but
Okay.
looking forward to the rest of the week. Thank you for having me on this podcast. This is awesome.
Yeah, absolutely. Happy to have you with us. So let's dive into a little bit of a background. One thing that we try to accomplish here is get a chance to talk with people that you may not see on the cover of certain magazines, and they don't have that fame. But what you often wonder is, how did a person get from A to Z? We see them at the top of the mountain, and it's like, okay, but you didn't see the journey to get there, right? And that's really where the learning takes place. So Sonya, if you don't mind, just tell us a little bit about your background for our audience here, and what made you even want to get going in commercial real estate.
Okay, so thanks. Yeah, so just a little bit of an overview. I'm the principal and founder of my company, Bedrock Real Estate Investors, and my company identifies, acquires, and manages and operates multifamily apartment buildings. And we do that by syndicating our deals. So what that means is that we purchase apartment buildings and we work with investors, people who want to purchase apartment buildings with us, and we pool their money together. And collectively, we purchase these multifamily assets. So
Okay.
I've been doing that since 2014.
Okay.
And, I didn't start out in real estate at all.
So how did you start? Where did you start in your professional career?
Yeah, so I started out in audit. So my background is in accounting,
Okay.
and my first job was an auditor for what would now be part of the Big Four accounting firms, and I was there for about 3.5 years or so. And it was invaluable experience, but I knew that I didn't want to be a partner there.
Mm-hmm.
So I knew that, after I got my license, pretty soon after that, I'd probably be transitioning out. And I had an opportunity to do that. So after I left the CPA firm, I went on to working at American Express, and I spent the majority of my career there. I got my MBA part-time, and I was in financial services doing financial analysis. Great people, worked with a lot of people, had a chance to do a lot of different roles. But at some point, riding the subway to work, I took the opportunity to just read books. And one of them was, probably a book that everybody's read at this point, Rich Dad, Poor Dad.
Okay.
And I got bitten by the real estate bug. It was just fascinating to me, just the thought of real estate, commercial real estate. And I think sometimes just being in New York, real estate is everywhere. It's everything, right?
Yeah, exactly.
And then I think sometimes you just don't even see it because it's just always there.
Mm-hmm.
And so, but I was trying to figure out, like, how am I going to make, I really want to do this, but how am I going to make this work? What's my current role?
Right.
As fate or as, blessings would have it,
Mm-hmm.
there were changes in the company, and my entire group, including myself, we were all laid off. And it was like a great point for me, because I was thinking, okay, what do I do next? Try to find another job in the company, move to a competitor, or do I try this real estate thing? do I
Yeah.
try to do this? And, it took a lot of soul searching, a lot of conversations with my family, my husband, my parents, who were all supportive, but they were sort of skeptical about what I'd be doing. And fortunately, at the same time, Project REAP in New York presented itself.
Okay.
And so somebody told me about it, I should say. And I applied, and, just a few weeks after I left my job, I was already starting with Project REAP in New York. And that also helped to really open my eyes to the different types of commercial real estate. I have to say, multifamily just resonated with me.
Yeah.
And so then after that, started consuming all things real estate. I joined my local RIA. I joined a multifamily investment group, and I met a joint venture partner through that multifamily investment group. I started passively investing in apartment deals so I could build up some credibility as to, having those conversations with brokers and talking about real estate to people who would potentially be investors. And then we got our first deal in 2014. And fortunately, I was able to work with you, Joel, in closing that transaction.
Yeah. Well, fantastic. Well, let's kind of recap there, because you brought up a lot of very, very good information, and I'm happy you did. If you look at it, so here you are, you're in accounting, you work for a very large corporation. Many people feel that they have security in a large corporation, but you've just proven that that is not the case. You can work for the biggest of the biggest and still get laid off, right? Which is certainly the case with you. You mentioned about the soul searching that it took for you to kind of get out of your comfort zone, to be able to say, because it would have been easier to just go get another job. But then again, if you look at what was going on in Brooklyn back at that point in time, downtown Brooklyn was really starting to take off and be redeveloped. And so you see all this going on, you're right in the middle of it. You see people making money. It's not you, and it's like, how can I get a piece of that? So where do you think you got the courage from to step up and say, you know what, let me just try this, as opposed to just getting another paycheck?
Yeah, I mean, it was having those conversations. Well, first of all, thank God I have my family who was just very, very supportive of me. And I think that was the critical piece, I think, in helping in me making that step, because, one of the things my husband told me was just like, what, you talk about this all the time. You're always talking about real estate. Why not try it? Why not do it? And a lot of times these things sort of line up, like the fact that Project REAP, I was able to get in at that particular point, so I could make a really quick transition into deep diving into commercial real estate. I was in the RIA group, and then I was able to join that multifamily investment group. I was starting to build around me also, a support system. Right. To be able to do this. And I realized there were other people out there. There were other people who were doing what I wanted to do. And one of the key things was that I knew that investing in New York, because when I was thinking about, real estate investing, New York is so expensive, and multifamily in New York is even more expensive. And you really need to have deep pockets to do that. And so I thought, okay, what I really liked about the groups and the people that I was meeting was that they were investing outside of New York. They were in New York, but investing outside of New York. And so it made me realize that I could be open to not just being in my backyard, which happened to be a very expensive backyard and hard to break through into. So putting those pieces together and realizing, if I don't try it now, there's, you get windows of opportunity to do things. And when you think, okay, what happens if I don't do this? So sometimes it's like, okay, you think, okay, what happens if I do this? But what happens if I don't do this now? And then in that whole process, it was like, okay, it's really now, or it's never going to be easier. It's never going to be like a better time later on. Right. So sometimes you just have to see the opportunities and, step out on faith and try it. And, we did have, we were just thinking about our financial planning and things like that. And we didn't have our children at that time. So there was definitely some more flexibility in my schedule then.
Yeah.
to try something like this. So I think all those pieces together helped.
Yeah, you bring up a good point. I remember an exercise that I did with one of my business coaches, and it really made you think. They had me go through the exercise of kind of writing my obituary, right? And you kind of sit there and you say, okay, what are people going to say? This guy talked a whole lot and didn't do nothing, or or he actually got out there and put forth some effort to get things done. And when you think about it, especially as you get older, look at all the years that fly by and how fast they fly by, right? And the one thing about time, you can never get it back. Once it's gone, it's gone. And so to take advantage of those opportunities while it's right there in front of you is very interesting. And happy you had the courage to do that, because you're right. If you would have slipped back into another job, then your time would have been eaten up and you wouldn't have had the opportunity to do a lot of these things. So that was huge. One other thing you mentioned that I thought was very valuable is you mentioned your association. You started associating with other groups and other members and other people that were in the space. You got some training. Then you also took some first steps by putting some money out yourself into deals so you could kind of see what it feels like on the investor side, which I think is very powerful, because people can then know what their investors want, because ultimately you're working and you got to please those investors. So how did that make you a better investor? How do you think that came into play with that?
Yeah, I think it was really important from multiple reasons. So first of all, I was making a transition, and people make transitions all the time, but I thought that it helped to add to my, new resume that I was building out, because essentially, like, I had a whole other career path previously, and I was pivoting and wanted to try to figure out how can I make that pathway leading into what I ultimately wanted to do. So I thought, okay, part of it is I don't have my own deal right now. I was just starting out. If I found people that I feel comfortable with, that I thought would be good sponsors and stewards, put money into an investment there, and then you can just learn. And then you're also building up your own resume, like I was mentioning. And to me, that was also very important for a few points. Since I was going to start talking to brokers and talking to them about, wanting to get deals, to start having deal flow, adds a little bit more credibility when you at least have some level of experience, even though, of course, I'm saying that, I'm an equity partner in these deals, but I could still have that on my, resume, if you will, of deals that I've been exposed to and invested in, not completely, especially in a commercial space where there's fewer brokers. You do want to have a good relationship and have a good impression with the people that you're working with. Like you would anyway.
That's a valuable point. The thing about it also, Sonya, is that it adds toward what Rich Dad Poor Dad talked about, becoming an investor. If you look at that the 4 quadrants, to me, that was the best book. I haven't enjoyed it. That wasn't the best, but it's really good when you think about it, because ultimately your goal is to be that investor, right? Where you're putting money out and getting a return. It seems like the part of the least stress for in a lot of ways.
Yes.
But that's a powerful point, because then you go from, well, I'm already an investor, right? I'm already an equity investor in these deals. So now I'm actually doing my own, and it adds credibility. So I think that's a very, very good idea. Certainly people can do that as well as it comes to getting that done. Now, you mentioned also about markets. As you know already, I grew up in Manhattan, so I'm very, very familiar with the price of real estate, right? And it's all around you. How did you decide? Because, New Yorkers tend to have tunnel vision. It's like, if it's happening, it's in New York. New York is it. It's the end of the world. The world is flat after New York. It all falls off, right? But how do you get to the point of realizing, well, hey, there's greater opportunities in other markets where I could actually make more money and have greater opportunity and even have a lower bar of access of entry?
You're right about that. Sometimes there is that New York tunnel vision. One of the things that I did was just started to look at some of the key metrics, some of the things that are important for like multifamily investing. And so I started first by looking at some trends. So I was looking at population growth trends. I was looking at unemployment rate trends, and I was looking at this at the MSA level, because all that information is aggregated at a federal level, so you can see it in different places, the Census Bureau, et cetera. So when I was looking at some of the key metrics of growth in population, business-friendly states, landlord-friendly states. South and Southeast seem to really hit a lot of those bars.
Mm-hmm.
And then as I started talking to people, I kind of zoomed in on Atlanta, and because it hit a lot of those, like I said, it hit a lot of those bars, and it had also the highest concentration of Fortune 500 company like headquarters, in the Southeast, and
Mm-hmm.
just a lot of strong economic indicators, even though Atlanta really did get hit pretty hard with the first crash that happened in 2008. And so when I was looking at those pieces, then I started talking to people. Then I started hearing things just anecdotally, like, "Oh yeah, I know, my family moved down there," or it was just like anecdotal information about some of the stats that I was seeing, and so that also just sort of made a positive, positive impression on me. Then I also just started looking further at the news and what was happening in the market. And then it was a matter of reaching out and talking to brokers specifically, and then just like starting that deal flow, because there were other markets that I looked at initially that I thought were going to be really good markets. And I knew people there, and I wanted to do those, move into those markets. But then the metrics that I was looking at just didn't support it. And so, it's important to understand the market that you're moving into.
Yeah, very good point. Appreciate you sharing that. Now, Kwame has joined us. He's one of our regulars. Good to have you, Kwame. He had a question for you, and I wanted him to go ahead and jump in here and get a chance to ask this question. Kwame, you mind asking that?
So first of all, Sonya, it is a pleasure and an honor to meet you. I joined Project Reeve. I've seen you involved with Cure here in New York, and I'm just so excited about this conversation. So I wanted to see if you could talk a little bit more about the accessing of capital. What I've noticed is there's been a lot of publicized efforts on the part of firms like a JP Morgan and other large firms to provide this capital. But recently, I kind of discovered a lot of those that access to capital comes in the forms of a loan or a debt product. What I'm not seeing, and I've seen a couple of them, is I'm not seeing these private equity firms, who talk in closed doors about partnering with developers of color, to have strategic relationships with them. I've seen a couple. I think Rod Mullis was on here. He talked about working with CalSTRS. DeJuan Williams is working with Tishman Speyer and Silverstein. I run the real estate group for Brown University. And my alum, Leslie Smallwood Lewis in Philadelphia, is now working with Ensemble to do a $2 billion project, the Philadelphia Navy Yards. So what my question is kind of like, are you seeing these kind of opportunities readily available, but are there still barriers there? How are you raising capital? What's going on? If you can talk more about that aspect of accessing capital, I'd greatly appreciate it.
The Morning for Joel CRE podcast is sponsored by ImpactMask.com. That's M as in Mary, ImpactMask.com. The world's most breathable mask that has 99% efficacy, which is higher than an N95 mask, and it won't fog your glasses. Check out the science behind these incredible masks.
Okay, well, thank you so much for your question, and congrats on what the work that you're doing. That's amazing. So starting out, we were raising funds with friends and family, and actually we still do that today. So a lot of it was, accessing our own, because I joint ventured on these deals. So, accessing our own personal networks of people who were interested in investing with us. Some of the groups that I joined and the multifamily group that I was part of, I was also able to meet other people in those groups who were interested in investing, but then, they ended up wanting to also be passive investors like I was, in deals. So that was also a great source of people who, finding like-minded people always helps. As you get, though, into larger deals, what we've done is the largest deal that we did. We actually joint ventured again brought in another partner who was able to bring in a significant amount of the capital raise that we needed for that for that deal. One of the challenges that you have as a syndicator, as a sponsor of the deal or general partner, is that a lot of times there's a lot of upfront costs that you have to put up. Some of it, actually most of it, you should be able to get back once you close the deal, but you do need to have a lot of capital upfront, especially with the larger size deals. Absolutely. I think though, from an access to capital, it's still about networks. It's still about having the access to the networks. And so, there are people who are partnering with different groups, and there are some groups that I've been in discussions with, like when I have deals that I think that could be worthy for them to look at. I will share them with them for sure. But I still think it's like being part of the circle, breaking the barrier to still being part of that circle of people, because they're not just going to like find you. You have to get into that circle. And I think that's part of the challenge for sure.
Mike, can I just ask one more thing?
Go ahead, Kwame.
Yeah. So for me, I find it interesting because I run a real estate organization for a university. It's interesting for me because in closed doors, I hear you certain things like, oh, we're looking for more Black developers to give money to. We're looking for this. And, Joel and I've had, conversations, and I've been trying to figure out my role and how I can actually help that, facilitate that. But what I'm finding also is that they say one thing, but then they say they can't find you. Are you finding that you're having renewed conversations given what happened with George Floyd? Or are they actually reaching out to you to say, hey, this is what we'd like to do, Sonya, how can we work with you? Are you getting that kind of outreach from them?
So there's a group that has been proactive in reaching out. And I think, again, though, it's really more of like a network thing, because I was, introduced to the group. We had a good initial conversation, but I think it's also about getting that access to even have that initial conversation and have them be exposed to you, and having that door opened for you to even begin those types of talks. So it's definitely a challenge, especially if you're, just coming up in the industry. But I think that it's important to, try to always like be there and to show up and to be part of those conversations, and try to find a way to get in, because we're definitely out here. There's no lack of talent, from my perspective, from what I've seen from the people that I'm able to interact with and work with.
No, very good point. Kwame, thanks for opening up that door to that part of the conversation. But, that's an ongoing subject. And Sonya, I think you hit the nail on the head. The bottom line is that it's the networks, because even if, they either don't know you, or you still have to have somebody vouch for you that, yeah, this is worth making an investment in. There might be a lot of money out there allocated for that, but until it actually gets deployed, they could always have the argument, well, we couldn't find no deals. We couldn't find this, we couldn't find that. I'm not going to mention any names, but I just had a conversation this last week with a young lady that was telling me about a very large institution that's raised $100 billion. And their biggest fear is that they won't be able to spend that money. They won't be able to invest it. They're like, we don't know where we're going to get the deals from. We're supposed to allocate that to our minorities, but I don't know. I don't know where we're going to get it from. And the reason why often is because they only know the ones that are on the covers of magazines. They don't know anybody else, right? So that's kind of the idea behind this whole forum. Let's introduce other people who actually have experience. Like you said, Sonya, there's no lack of talent, right? So it's there. Let's put it out there. Let's let people know what's going on and spread that wealth. There should be no reason a firm should say, we've got all this money and I can't find a way to spend it. That's ridiculous, right? So we need to solve that problem. So that's crazy. But Sonya, tell us a little bit about some of the deals that you've done as well, so we can go a little bit deeper into your background. You gave us that good introduction on how you got started. I could just imagine you there riding the train in from Brooklyn. I know that feeling. I used to go the other way toward Brooklyn, but yeah, So what have you done multifamily wise, since that point in time where you got over that fear of actually jumping in and getting some stuff done?
Yep. So we've done four multifamily deals since I started out. The first deal was, and all of the deals have been in Georgia. Three of them in Atlanta, and one of them is in Augusta. So our first deal was a 48 unit deal. That's been our best deal to date. We held that deal for about 2 years, and that was the one that Joel was instrumental in helping us get financing for that. It was a time when it was the banks were just really tough with lending in Atlanta. And Joel was able to source a great institution that worked really well for us, and we did very well in that deal. That was, like I said, one of the best ones, actually the best one that we've done so far.
We got to do it again.
Yeah, absolutely, absolutely.
Yep.
Then we moved on to a 56 unit deal. After that one, about 2 years later, we purchased that 56 unit deal and sold it also. So of the four deals, life cycled or exited two of them, and then moved on to 174 unit, which is the largest deal that we've done. And that was the deal I was mentioning where, we brought in another, JV GP who was helpful and instrumental in that raise. And then Augusta is a 96 unit deal in that market. And that was a new submarket for us.
Yeah. So you think you're ever going to go back to working behind a desk in some office somewhere?
If I can avoid it. I really like this life. I mean, it's a lot of work. I can't say that. Sometimes I think, am I working more than I was, at my job? And in some cases I am, because I have my hands in, different things. But at the same time, I really love it. I love the flexibility. I love looking at deals. I love the opportunity to help people in so many different ways. I'm thinking about our investors, helping them. You are owning an apartment building complex, so you are responsible for making clean, safe homes for people, and that's very important. And so that's community, that aspect that you have an influence over as well. So that those are some of the things that I'm thinking about, especially as we look at new deals and look at continued joint ventures.
Yeah. Very good point. Very good point. So, but it might be a lot of work, but it's rewarding work.
It is.
And
it is.
Yeah,
it is.
Absolutely.
It is, and it's exciting as well.
Yeah. Good stuff. Good stuff. So appreciate you sharing that. So let me just mention this for anyone else that's on the call today. As you know, we like to open up the chat box. If you have any questions or anything that you want to ask Sonya about, feel free to do so. You can put that in the chat. And we'll certainly love to entertain your comments and your thought process. I see a couple of people on here that have been involved and are in development deals right now. So we're happy to hear from you as well if you want to get engaged. Well, while we're waiting on that, Sonya, talk to me. We had this conversation the other day, but let's do it for the benefit of everyone else. Where do you think the market is headed as regards cap rates, opportunities, all those different types of things? If someone is trying to follow your example, what would you recommend for them?
Yeah. So one of the things that I've seen, especially in Atlanta, which has been, an anchor market for me, has been the absolute competitiveness in the market. It has gotten, and that's almost an understatement. It is extremely competitive right now in Atlanta to purchase multifamily, especially targeting the somewhat larger size deals, like 100 units and above, which has been our goal, just because of just better economies of scale.
Yeah.
Right now, you're competing with so many different forces. You have people who are moving sectors, so money that they had initially invested in like retail or in hotels, they're now allocating towards multifamily because at the end of the day, people need a place to live. And, that asset sector is just showing a lot of resiliency, even though it is challenging because you still have to deal with delinquencies and collections and things like that. I also think that with that, it's actually forced me to think about other, how to look at some other markets as well. to broaden a bit because of that competitiveness in Atlanta, even though I think the fundamentals of that market are still very strong. All the things that existed previously that I looked at, I think have gotten even, multiplied. And so people have been moving there, especially after the pandemic. People are looking for lower cost of living, larger size spaces, and the Southeast has been a target for a lot of population migration, if you will. And when you have that, you have investors that follow right after that, especially a lot of New York money. There were a couple of deals that we got beat out by from some like family offices in New York that would not have happened, a few years ago, because everybody was so New York focused. And, it's hard to say exactly what is going to be happening, next. But one of the things that I'm hoping that we see improvement is it's definitely in some of the sectors, like, in workforce housing, which is where we tend to primarily invest. So you're like your class C or C plus properties. There's a level of delinquency that you have to contend with because of the jobs. There's a, job situation. And I think that, one of the things, in addition to the vaccine getting out there so that people can start to open back up again. I know some states are more open than others. I think that between the vaccine, jobs, and also some of the plans, I think that the overall federal government has. So I think it's important to pay attention to those trends too, like where's the investment going to be going? In terms of infrastructure and what the priorities are of the administration, regardless who's sitting in the seat. I think it's important to understand that, because you can see where the money is going. And, as they always say, follow the money. So,
yeah. Well, that's a true statement, and it's interesting because the things that you've mentioned as regards fundamentals is what everybody else sees, so you're not the only one. And because of that, we see that. Certainly, you're absolutely right about Atlanta. I was mentioning to you the other day that I saw a deal that was about 5.5 on the cap rate, and immediately dismissed it because it was out in the suburbs somewhere. And then I started looking around again. I was like, wait a minute, that may not have been such a bad deal.
I know. I was thinking 5.5.
So yeah,
Great.
Right. You tend to get fixated in your mind as to what's a realistic cap rate, and generally, when I get below 5 in my mind, I'm thinking Midtown Manhattan, but that has completely changed. It has completely changed.
It has. So I think one of the things that's really important, like when you're looking at these deals, because I'm joking with you, 5.5 is actually not really that good. But I mean, in this market right now, it's pretty competitive from what I'm hearing and seeing. But it's having a close pulse on what's happening in the market to just help, model out, like, where do you think rents are going to be able to go, or what, and it's a challenge because it's like you have to build in a whole lot of future forecasting into models, where in the past it was really more like buying on, what's there. And so now it's like you have to stretch beyond that. And so it's a challenge, because you want to make sure that you have a good balance of understanding, what is there, what can grow, and where the value is. And I think it's even more important now to zero in on how you get that value. And some of it may be top line, but then you also have to look at expenses as well. And so I think it's a little bit more challenging because it takes more diligence in that underwriting process, in your review process.
Yeah, that's very, very important, because you don't want to be buying, basically at the top of the market, like in 2006, right? Those people who bought in 2006 that thought it was just going to get higher and higher and higher got killed in 2008. So, where are we at in the cycle? I mean, things are great right now. A lot of it is COVID related, but, where does it start to crest and come back down the other way? So you got to be careful. And one of the things that we were just talking about, because you were asking me that question, about that, where do you deploy in situations like that? And, you find value in, you either build it in by doing development, or deal with those C-class properties and try to bring them up to Bs and still handle it from that standpoint. So a lot of the A-class properties are getting crushed because the cost of operations is so high. There's nowhere to go, but up, and that becomes very dangerous. Yeah.
Yeah, I mean, we're seeing that, and we're seeing that in New York. We're seeing that in Brooklyn. The level of concessions that has to take place for owners to get people into their buildings, especially when, especially like a downtown Brooklyn, there's a ton of product right now. And so, there's a lot of concessions that are happening. So that, that's usually not built into the models.
Right.
And, it's nobody's business model to like not make money and to not collect rent. There's definitely a lot that needs to be mitigated. You have to make sure that you're connected with the people that are in your residence. But at the end of the day, people are looking for the best deals, and especially in like a Brooklyn. And I've just heard of people who are like, they're just apartment hopping because they can find better leases and better deals from a leasing perspective.
Yeah, you figure you move a few times and you get that two free months rent and all that kind of stuff. You can do all right.
Yeah,
so, absolutely. Well, let me bring in Vincent Baker. He's actually a developer in Augusta. Since you mentioned that, he's working on some things right now. We're actually helping him out with the project. And Vincent, good morning to you. But he mentions here in an emerging market like Augusta, where you are one of the flagship developers, how did you overcome the lack of data and bringing the vision to the city, investors, and the consumer? Like I said, he's doing a development project there, and maybe he's having a little trouble with that as it relates to sharing that vision. Do you have any input on that?
Yeah, so it's slightly different. When we purchased our property, it was an already existing off-market opportunity in Augusta. So already existing deal. I mean, we didn't do ground up, but it was also an off-market opportunity that we had gotten, and we were just seeing what was happening. Most of our investors had been with us, for a while, and had seen what was happening in terms of prices in Atlanta market. So, for us reaching out and actually going into a new market, they were actually pretty happy that we were expanding and looking at other places to invest. Augusta is definitely very different than in Atlanta. And not only, is it just 2 hours out, and even though it's I think it's the third largest MSA, if I'm not mistaken, or the second in Georgia, it's still a much smaller market. So, I mean, some of the things that we did was at the time, we just identified some of the industries that we thought were of note in the market. And at that time, we saw a lot happening with like cybersecurity, for example. And, one of the things that I recommend that people do when they're looking at markets is I always look at the Economic Development Corporation of the city, or look at just some of the city websites, because that's like the city's own boasting of what they're doing, where they're doing their investment. So just like on a macro level, you have to understand where the dollars are going. Do the same thing with the local level as well, so that you can understand where the dollar is going and how the city is defining themselves and where they're making those particular investments. And that helped a long way for us in that vision.
Okay.
Hey, how's it going, man?
Yeah. Hey, Vincent, how you doing? Thanks for jumping in here.
Yeah, man, I'm driving, so I had trouble getting it up on my car while I was on the road. But
okay.
Thanks for just spreading this knowledge and giving us this opportunity to listen in. It's great to hear from you and talk about your projects in Atlanta and Augusta. And I missed part of it because I had to get back on, but I think I came in at the last of it when you were talking about, I believe you were saying something about working with the city and finding where they want to do projects and where their interests are in growing these different communities.
Yeah. So when I'm looking at a new city, or I'm always looking at the Economic Development Corps for the city to find out What are they doing? What do they think are their top industries? Where are they investing? How are, and then I also do searches for headquarters moving to those cities. I try to do like Google alerts or things like that so I can get like information periodically about what's happening, what's happening there. Also, I would say that speaking to some of the brokers, if you have connections with any of the local officials also in that area, especially as a developer, I think that those are good partnerships to develop, so that you can have a pulse on what's happening with people who are, making some of those decisions. And I think good things can come out of that as well. So I think that those are definitely some sources that I would use to help with your understanding of where the market is going and how you can get your investors comfortable with that market. And
how do you feel about the market personally?
Yeah. So, I mean, for us, it was actually a big difference. It's a big difference from moving from Atlanta to Augusta. And I would say that with our project, we're in like a C plus, C plus neighborhood. We have a like a 1980s, property. And what I found is, it's important to have, if you're going to have third-party property management, I think it's important to make sure that you have good connections on the ground. One of the things that we had experienced was that the initial property manager, like the on-site person, wasn't as connected to the local market in terms of sourcing some vendors for us, for example, but for some of the work that we needed to have done. And what we found is that it's not as easy in Atlanta, where there's, kind of like a lot of different contractors to be able to come in to do things. It's a smaller market. So our new on-site person has, been doing this for a while, is very connected with the area, was able to help us source some good vendors that we're working with. And all of those things have helped a lot. But it is a difference moving from a larger market like Atlanta to an Augusta. So you just have to be really, I think the more connected you are, the better you'll fare with managing and sourcing for all of the outside and third-party help that you need.
Thank you.
So it goes back to relationships all over again, huh?
Yeah, it does.
Boy, oh boy. Some things never change.
You can't get out of it.
Absolutely. Well, Vincent, thank you for joining and participating with that. So, and that's what this is all about. It's all about us getting together and communicating and talking about opportunities. And so, we appreciate that. So as we wrap up for today, Sonya, what goals do you have for yourself? What are you looking to achieve now as you go forward? Knowing you've always got your sights on the next thing. So, where would you like to be in the next 5 years, let's say?
Yeah, well, at the end of the day, when I'm thinking about our company and our business, and I say this when people ask me sometimes this question: you can't pass down like your degrees or your licenses and things like that to your family, but you can pass down a system and a process of acquiring and managing multifamily or assets overall, right? Mm-hmm. And so for me, one of the things that I'm thinking about and that's part of the vision and goal is to create that multi-generational system to pass down to my family and to also help better the lives of the people that invest with us and that live in our communities. So I'm looking towards growing our business so that we can hand down like a system of cash flows mm-hmm. for our family. And that's really important.
Yeah. You just touched on something that's very powerful. A few years ago, we actually helped out and closed out on a project that was part of the new Black Wall Street in Tulsa. It's quite an amazing story because one thing that was brought out is that generational wealth and knowledge didn't transcend. Well, could you imagine what Tulsa would be today for Black Americans if that had never happened? I mean, it would just be unbelievable. It would be a testimony to what could be done for the whole nation. And unfortunately, because it was burnt down and because of the violence and people didn't want to talk about it, everything just kind of got swept under the rug. I mean, even myself for many years, I thought it was just kind of like a fantasy thing. It wasn't a real thing. It wasn't a real place, and then you find out that, yeah, it was. It really was. But you touched on that valid point because those connections so often come from family, right? And so if somebody in the family has done it, that immediate connection is there to help the next generation build on that, and you don't have to go outside that circle and try to meet other people to try to make that happen. And the ones that are generally the most wealthiest are the wealthiest families. They all know each other. They associate with each other. They invest with each other. And that's how the children of those groups wind up being wealthy too, even though they're not smarter than any one of us. All right.
Absolutely.
So it's an incredible thing. And I think you really just hit the nail on the head with that. It's about being able to, I used to call it when I was, doing a lot of workshops and everything about the family bank, and how the Rockefellers set up a system for themselves with trust and everything else where family members could borrow from the trust. So they always had money. And when a family member would die, that money would go into the trust. So there was always money for the next generation. I mean, it was powerful. But if you don't have that knowledge and those connections, you'll never make that happen. So powerful point. But Sonya, I appreciate you bringing that up. So very, very
sure.
good.
And the other thing is with commercial real estate and the reason that I really love everything that I've gotten from REAP is because a lot of times when people think about real estate, they think about, and including myself, prior to getting more exposure, is just, okay, it's just, a house or, that salesperson down the block who just put up a sign that they're going to sell a house, but it's so much bigger than that. And there's so many more aspects in that. And a lot of it is just exposure. And imagine if people had that, at younger ages.
Yeah.
And so it makes me happy when, my 5-year-old daughter is saying, Mommy, are you going on the call to talk about the property investments? She calls it property investments. And, it's just the exposure is, that's the initial part of it. I mean, not everything is for everybody, but you have to know to be able to make that choice.
Yeah, I couldn't second that more. I mean, I always used to say how it's amazing that 125th Street in Harlem is one train stop on the A or the D train from Billionaires Row. One train stop, right? And yet and still the mental difference between the people in those two areas is so stark. Why can't you get that exposure to understand that? It's on the same island, right? A few miles apart, but the mindset is so different. So if you're not exposed to, you can actually own that building. Yeah, you can actually, be the landlord of this or own that. Then you'll never even think about it being a possibility. You'll think your only way out of your situation. I know when I was a kid growing up, it was drugs and sports. That was the only way out of the hood, drugs or sports, and yet and still you got one train stop between Billionaires Row and 125th Street. It's unbelievable. So that exposure is extremely important. So thank you for bringing that out. We run a little short on time because I know you got to get to another meeting. Toya wanted to jump in and say something real quick before we left. Toya, are you available?
Yes, I'm available. Good morning, everyone. Sonya, I just wanted to make a quick comment. Thank you so much for your time. This was a very timely presentation for me. I am in Atlanta. I went through Atlanta Week in 2019, so I did have the pleasure of meeting Joel as well, but I followed you for a while, Sonya, and I've heard you speak on other platforms, and your story has resonated so much with me because I'm in transition from one of the very large CBRE corporate real estate company myself. And, just like you said earlier, the support of family, and just being so thankful for my husband as I make this transition. But I did want to ask, what made multifamily resonate with you over other commercial real estate assets?
Yeah. So for me, I think part of it is being from New York. I grew up in apartment buildings, like I just connected with what it's like to live in an apartment building. Also, when I just think about some of the other asset classes, retail, I thought that was interesting too. But I thought at the end of the day, like, people need a place to live. People, you're providing a basic need. So I thought that would likely be always in demand because people need a place to live. And then in terms of single family versus, multifamily, that was really more of like an economies of scale to me, like having 50 different houses. And for some people, they can make it work really well. Like, they have their 50 houses and they're able to service them and manage them. But for me, I think 50 houses, 50 roofs, 50 lawns, 50 tax bills. So
Yep.
that economy of scale of having a concentrated space of units just really makes a lot of sense.
Yeah, my thoughts exactly. Thank you so much. And again, I appreciate your time and the knowledge and information you've shared with us this morning.
Thank you so much. And
Yeah.
continue good luck on your journey as well.
Thank you. I appreciate that.
Yeah. Good point. So thanks you for bringing that out, Toya. You think about the asset classes, we won't really get into it in today's discussion, but, industrial is doing extremely well right now. But when they go vacant, right? There's generally one tenant, generally single tenant assets. You look at offices, we see what's going on with that right now. You can work from home, but, you don't have to necessarily have an office. And then, retail obviously got punched in the jaw with this as well. So there certainly is. People always have to have a place to live. And Sonya, you definitely, you definitely brought out the key points and the value of doing that. So we certainly appreciate it. So any other comments before we break? I know you got to get out of here. Yeah, you got about 5 minutes to your next call. So we'll go ahead and end it there. Sonya, any final comments for us today as we wrap up?
Thank you for having me on. Thanks for having this platform. I think that it's really important that people connect and they connect with each other. Another valuable thing with REAP is, the people in your class. So, be sure to make sure that you stay connected with them, even in this virtual environment. In some ways, you can reach people a little easier because you can do a Zoom call and people are at home. But I really just think that this is an amazing platform, and I appreciate you, Joel, for having it.
Sure. Well, thank you for being part of it. We certainly appreciate it. And to all of you who might be watching or listening to this is the Mornings with Joel CRE podcast. We're certainly happy to have you with us today and to join us. And please continue to tune in the future for other fantastic guests like Sonya Rocvil that are doing amazing things in the commercial real estate space. We're really fortunate to have her with us. And she just put her email address in the chat box. So make sure you grab that and keep in touch with her. And thank you so much for being here. Thank you, everyone. And we look forward to seeing you next Monday at 10 a.m. Thank you, Sonya.
Thanks.